It's Tuesday, December 7th, 2021. Well, here we go again, ladies and gentlemen. The bubbles continue to get bigger. The melt up continues. This train is off the rails. When I see the manipulation like we're seeing today, it's getting very, very concerning. These bubbles have gotten so big, and you and I both know when these bubbles burst, it is going to be a god awful mess. These bubbles should have bursted a long time ago, and they've gotten so enormous now, and the damage is going to be so inconceivable. People aren't going to know what to do. And right now, they are drinking the Kool-Aid. They're euphoric with what's happening. They see no danger, no risk. And this, my friends, is very, very dangerous. When you don't see risk and you don't see danger, people doubling, tripling, quadrupling down into these markets, it's really, really concerning, ladies and gentlemen. And I know a lot of people out there are dancing and just embracing this, but you're embracing nothing but manipulation, criminality, the illusion, and it's all going to come to an end. And people are going to continue to buy these dips, and one day these markets aren't going to bounce back. And again, as I make this video, it really, really makes me feel sorry for the amount of pain people are going to suffer because of these markets. And even people who aren't in these markets, because the majority of people are not in these markets, they're going to really feel the pain because of the aftermath when this all comes tumbling down. You know, you have to ask yourself, did these markets help you at all today? I mean, we'll be at all-time highs before you know it, but is any of this helping you? I drove by the gas station today, $5.19 for super unleaded. Went to the grocery store, and in the shopping area of the grocery store, multiple for lease signs, for lease, for lease, for lease, for lease, for lease, more vacant buildings. The grocery store, I was at Winco, and a lot of product they have pushed to the very front and nothing behind it. But compared to most stores, they do a great job of keeping a lot of inventory in that store. But even at that store, I noticed that they're pushing everything up to the front, and many items, there's nothing behind the first two rows. So we're seeing the effects. I see more homeless people. I see more people dependent on credit cards. And yet, all we hear about is how great everything is because the stock market continues to inflate in this massive bubble. But is the stock market helping you? Is it helping the average American? Is it helping the economy? No, the economy has been sacrificed for the stock market. And, you know, people out there are saying, oh, you know, I'm making money. I made this, I made that. The valuations now are so high, you've got to be betting so big right now in these markets to make money. You've got to be betting huge in order to be playing in this game right now. The average person cannot even afford to even get in the game. And there's so much risk out there. We'll see how it all plays out, but just a very, very interesting day. But I was reading this article in the Hedge today titled, Bank of America saw biggest buy the effing dip inflow since 2017 as buybacks soared. 40% of this bull market is due solely to corporate buybacks. Think about that. I mean, what you're seeing right now, a majority of it is corporate buybacks and the Fed buying up massive amounts of this market. 41 years ago, stock buybacks were illegal. Think about that. Now they're not. They were considered a market manipulation scheme. Now it's a feature act at the casino, ladies and gentlemen. I mean, they just twist the rules, bend the rules, manipulate things however they have to do it. They manipulate the numbers, whether it's inflation or unemployment. It's all manipulated. Housing numbers, all manipulated. And I don't know when this thing's going to come to an end, but when it does, it is going to be a disaster. Corporations and institutions are both being kept flush with Fed money. So we're getting more of this extend and pretend. They're borrowing money for next to nothing. You can't do that, but they can. And they can gamble in these markets. And, you know, just like 2008 when everything bottomed out, well, the average person didn't get bailed out, but corporate America got bailed out, but you didn't. Record buybacks plus record insider sales equals record number of bag holders. Remember that, ladies and gentlemen. U.S. companies have planned to purchase $1.1 trillion of their own shares this year. That's 3 times more than last year. But yet, there's no manipulation. This is all real. Of course, this is an illusion, right? Another article today coming from The Hedge. Mainstream economists are struggling to hide the incoming economic collapse. Again, use your own 2 eyes, ladies and gentlemen. When I was out today, for lease. There's another homeless person, another homeless person, another homeless person. There's people living in an RV over there, people living in an RV over there. There's a homeless encampment over on that street. This stuff is no longer being easily hidden from the American people. The U.S. economy is not the stock market, ladies and gentlemen, and the U.S. economy is literally being sacrificed for the stock market. There is a complete detachment between the stock market and the U.S. economy. The U.S. economy is extremely vulnerable now. Money created out of thin air by the Fed has been used to support failing and corporations, not just here in America, but around the world. The Fed got away with this a very, very long time ago, and it's been printing money for decades. The main reason it could do this is because the US dollar is the world reserve currency, and we have abused that power, ladies and gentlemen. And I believe that it is beginning to wind down. Consumers right now are tolerating this inflation, but how much longer can they tolerate it? Where's the breaking point where it begins to really hit the average American's pocketbook viciously? When this happens, then the real crisis begins. When the average American really, really begins to feel the pain, and they're feeling it right now, but they're tolerating it. I see people out driving around. People are at the mall, even though my mall is in foreclosure. People are out and about. They're using that money, the equity they pulled out of their home, using their home as an ATM. They're relying on that. They're relying on credit cards. They're relying on buy now, pay later services. Again, the whole thing is now a giant illusion. It's extend and pretend. And it's going to come to an end, ladies and gentlemen. And the longer this plays out, the worse the ending of this movie is going to be. The Fed can continue with inflationary programs. Then they risk taking the blame for the extreme price increases. They're in a conundrum here. They're in a catch-22, ladies and gentlemen. If they taper these programs, they risk imploding the stock markets, which have been massively inflated by all of the stimulus, all of that QE, all of that helicopter money, all of those injections. We're going to see one of 2 things. One, we're going to either see massive stagflation, or 2, we're going to see a massive deflationary depression. I would get ready for either, ladies and gentlemen, because it's going to be a very, very rough time either way this thing goes. Another article today. Maxed out. U.S. consumer credit growth slows sharply in October. This is what happens when the free money runs out. And this is what happens when people begin to use the credit cards for everyday needs to pay the essentials. They get maxed out after several months of blistering growth in consumer credit as U.S. households charge purchases on credit cards helped by all those stimmies fattening up their bank accounts. But now all those stimmies are drying up. Those bank accounts are beginning to deflate. Those bank accounts now are emptied out. In October, the growth in consumer credit dropped notably, rising just $16.9 billion, missing expectations of a $25 billion increase and down sharply from $27.8 billion in September. We saw a big slowdown in non-revolving credit as well, which rose $10.3 billion in October, down sharply from $18.1 billion in September. In May, it was $24 billion. How many people right now are already maxed out and it's not even Christmas yet? It's the first week of December and millions of people are already maxed out. How many people are going to be maxed out by the end of this Christmas? 35 million people are still paying last holiday season's credit card. And people right now who shouldn't be spending are buying things with money they don't even have. And so it all goes back that when these bubbles do burst, and they're going to burst, ladies and gentlemen, all bubbles burst. There's never been any time in history where bubbles didn't burst. And we've got massive, way overinflated bubbles that are going to burst. And it's going to be ugly. But we got a real problem here because we're already at 0% interest rates. We're approaching $30 trillion in debt, $170 trillion of unfunded liabilities, 80% of this country working paycheck to paycheck. I don't know how many people now are reliant on credit cards just to pay essentials, but it's in the millions. We've got 500,000 people trying to do loan modifications to save their homes now as they exit forbearance. We've got over 250,000 people, 267,000 households that are severely delinquent, 37,000 households in foreclosure. This is a mess, a disaster, and we haven't even imploded yet. What is this all going to look like when these markets burst? We're watching the economy burst right now. When these people who ask me, when's the economy going to collapse? Take a look at it. I've never seen the economy in such a mess. It's unraveling right before your very eyes, as 80% of this country lives paycheck to paycheck. Most of this country, massive credit card debt, college tuition debt, auto debt, 30, 40, 50% of their income going to pay rent or mortgage. This is going to be very, very bad, ladies and gentlemen. It's unavoidable. It's imminent. We are going head on into this mountain of disaster at 100 miles an hour. And when we hit this wall, it is going to be ugly. Let's talk about this really quick. We haven't heard about Evergrande for a while. Evergrande default is inevitable. S&P warns as Chinese developer misses dollar bond payments. Remember, markets across the board up today. Dow Jones up almost 500, but offshore bondholders did not receive coupon payments by the end of a 30-day grace period, pushing the cash-strapped property developer closer to default. After the missed payment, there are billions more coming due. We've got $300 billion in total liabilities. Dow up, no problems. And to think that the largest developer in the entire world defaulting is not going to affect the globe, you are drinking the Kool-Aid. Kaisa, another huge developer, could not meet its $400 million offshore debt deadline either. There are a multitude of these development companies in China that are in huge trouble. They're defaulting, they're going down, and there are people here in the U.S., banks, hedge funds, pensions, you name it, invested in these development companies, heavily invested in these companies. So to think that this isn't going to have an effect on America, I think you're sadly mistaken. But yet nobody talks about it. I did not see it mentioned anywhere today. All they were talking about was this economic euphoria based on nothing. Why are the markets exploding right now? Why are we seeing this massive surge? What is it all based on? The employment numbers are horrible. Manufacturing, production, horrible. Debt, horrible. I'm looking at small businesses being wiped out. Where's the good news? Why are these markets surging? Oh, I guess it's corporate buybacks and the Fed coming in and buying it all up. I'm going to wrap it up with this last article today. Many of you probably have already heard the news. Facebook, Amazon, Venmo, all down. Outages hit thousands. Earlier today, Merrill Lynch was down, then Vanguard and Robinhood. And now a slew of even more widely used websites are suffering widespread outages. And I close with this article, and I want to just talk about it for a second because this is concerning because so many people now use digital money. They use their plastic card. Everybody's got a bank card. They're using their debit card. They're using a credit card. They're using cryptos. Everything linked to the internet. And when we have outages like this to me is just another wake-up call of why you shouldn't have all your money in the bank, because if there are massive outages, do you think you're just going to walk into your bank and they're going to give you money? First off, you have to understand that your bank carries a very small amount of cash. That if every client of that bank came in at the same time, not everybody is leaving with cash. Many banks will limit you to $2,000, $3,000, $4,000 of cash. That's it. Many banks don't even carry more than $20,000, $25,000 in cash. Many times you have to order your cash if you're making a sizable withdrawal. But if the system goes down, the bank cannot do a transaction. It cannot process a transaction. The doors might be open, but they're not going to be able to operate because the system is down. They might have cash in the vault, but they're not going to be able to do a transaction. So this is why I think it's important not to have all your money in the bank. But we see the amount of cyber attacks, and we see now, again, all of these sites going down. And not saying that this was a cyber attack. Don't know exactly what caused it. Maybe it's another glitch. But these glitches are happening more and more often. And I think it's very important to really critically think about a worst case scenario that for whatever reason, the system went down, the power went down, something happened in the system, whatever. Bottom line is you're not getting your money. You're not going to be able to go to the store and buy a loaf of bread or buy a steak or hamburger. What if the system goes down for a couple days? Most people would be okay, I would imagine. I don't know, maybe most people wouldn't be, because everybody today uses plastic. I think it would make people very, very uncomfortable. But what if it went down for a week or 2 weeks? I mean, we really got to be thinking about a worst case scenario, because the stuff is happening more and more often, and we're so reliant now on our phones to do a transaction. We're reliant on those little plastic cards. The system is very, very fragile, and it can be brought down very, very quickly. And the economy can be brought to its knees really in a matter of minutes, hours, because these things can get very, very widespread. But again, don't keep all your money in the bank, because things like this are going to happen more and more. And again, everything is connected. Everything is on a computer. Everybody's dealing with plastic. And it just takes a couple events, and this economy can be brought to its knees. And so make sure that you have money you can get to, physical cash, physical gold, physical silver, in a place that you can get to in a time of emergency. Because I don't know about you, this makes me feel uncomfortable because it's happening more and more often. And so we have to really, really be conscious of the possibilities, because everything now is so dependent on a computer, on electricity. So just takes an event, ladies and gentlemen, and your world is going to change very, very quickly. So the more you have outside of the system, the less dependent you are on the system, the less dependent you are on banks. I think the better chance you're going to have to survive during bad times. So I'm going to leave it there. Please comment down below. Let me know your thoughts. Again, it's euphoria on Wall Street, but it's a nightmare in the economy. God bless.